Hello, friends, and I want you to stop whatever you're doing for the next few minutes because what I'm about to share with you is not a scare tactic. It is not a way to get your attention for nothing, and it is absolutely not clickbait. What I'm going to walk you through today comes directly from the American Bankers Association, the FDIC, the FBI, and individual banks across the country who have been quietly issuing some of the most serious formal guidance they have ever released, guidance aimed specifically at protecting seniors from losing everything they've worked a lifetime to build. Not suggestions, not friendly tips printed on a bookmark at the branch, formal warnings, official alerts, policy-level changes backed by federal consumer protection agencies that most people have either never seen or didn't take seriously enough when they did. I went through all of it, every document, every federal alert, every state-level bulletin, and I made a decision that this information needs to be spoken plainly, in language that everyone can understand, because the gap between knowing this and not knowing it is the gap between keeping your money and losing it permanently. Everything I'm covering today applies to anyone who receives Social Security on a card, visits a bank branch, uses an ATM, or has a checking or savings account in their name. That is essentially every senior in America, and a significant number of their adult children who help manage those accounts. Watch this until the very end, and when you're done, I want you to pass it to someone you care about because this information is genuinely worth having before something happens, not after. Before we get into everything, I want to ask you to subscribe to this channel right now and turn on the notification bell. And I want to take 30 seconds to explain why that actually matters here, because this isn't just a standard YouTube ask. The threats I'm covering today are not the same ones that were circulating 2 or 3 years ago. The crypto ATM scheme, the cash trap devices, the phone handover manipulation, the silent document tricks. These are active right now in 2026, documented by federal agencies this year, and the overwhelming majority of people have absolutely no idea they exist until someone they love loses everything to one of them. What I do on this channel is track exactly this kind of information. New threats as they emerge, new rules as they take effect, new protections as they become available to you, and I bring it to you in plain language before it becomes a problem, not while you're trying to recover from one. Hundreds of thousands of people rely on this channel to stay ahead of what is happening to people just like them. The people who are subscribed find out in time to protect themselves. The people who aren't tend to find out after the money is already gone. That is the entire difference. Please hit subscribe, turn on the bell, and let's get into what you came here for. Let me start with something that has been escalating sharply this year, and that banks are now actively warning about inside branch locations across the country. There is a scheme operating right now in 2026 that is emptying senior bank accounts in a matter of hours. And what makes it so dangerous, what makes it different from the scams most people have heard about, is that it doesn't start online. It doesn't start with a suspicious email. It doesn't start with a phone call from a number you don't recognize. It starts in person. It starts at the ATM. It starts inside the bank itself, in the ordinary course of an ordinary day, when nothing feels wrong at all. Banks are telling their customers directly and formally, the people standing near you at the ATM are not always innocent bystanders. This year, the American Bankers Association issued an official fraud alert following documented cases in Philadelphia and surrounding areas where criminals had been placing physical devices inside ATM cash dispensers. These are called cash traps. They are small, they are designed to be invisible to the customer, and they are inserted directly into the cash slot of the machine. When you complete your transaction and the machine processes your withdrawal, the bills are physically captured inside the device before they reach your hands. The screen shows the transaction is complete. Your balance reflects the withdrawal, but no cash comes out. You stand there for a moment confused, assume the machine has malfunctioned, and you walk away. And the moment you do, the person who placed that device, who has been watching, who has been waiting, walks up, removes the trap, and takes your money. The ABA and the United States Secret Service have both issued specific warnings about this scheme in 2026, and this is the guidance they are giving. If you use an ATM and cash does not come out after a successful transaction, do not walk away. Do not assume it will sort itself out. Do not go home and call later. Stay at that machine. Call your bank immediately from that location and ask them to flag the transaction before you leave. The few minutes it takes to make that call could be the difference between recovering your money and losing it entirely. That is the foundation of the first formal rule banks are now telling seniors directly. Your card never leaves your hands, not to a stranger who offers to help because you seem to be having trouble, not to someone who says they work for the bank but is standing outside near the machine, not to anyone who is not behind a secured teller window inside the branch itself. This is not a suggestion about being cautious with strangers in general. This is a specific warning about a specific technology that most people don't know exists. The device is called a skimmer. Its more recent and more dangerous evolution is called a shimmer. A skimmer reads the magnetic strip on your card. A shimmer is small enough to be inserted directly into the card slot of an ATM, and it reads your chip, the part of your card that was specifically designed to be more secure. You wouldn't see it. You wouldn't feel anything different when you insert your card. The read happens in under 3 seconds of physical contact. 3 seconds of someone else holding your card, someone offering to help, someone asking to look at it, someone who bumped into you and grabbed it, is enough for everything on that card to be captured and duplicated. If you ever have difficulty using the ATM and need assistance, walk inside the branch and ask a uniformed bank employee. That is what they are there for. The second formal rule banks are issuing has to do with your PIN, and this one sounds simple until you understand exactly what banks are documenting about how it gets stolen. Cover the keypad with your other hand every single time you enter your PIN. The ABA's official consumer guidance states this plainly, without qualification, every time, even if no one appears to be nearby, even if the area around the ATM looks completely empty. There are documented cases, not theories, not possibilities, documented cases investigated by law enforcement, where small mirrors, cameras disguised as ordinary fixtures, and audio-capable recording devices positioned near ATM keypads have captured PINs from customers who were completely certain they were alone. The technology used by sophisticated fraud networks in 2026 is not what most people imagine. You do not need to be looking over someone's shoulder to steal their PIN anymore. The coverage you provide with your hand over that keypad is the most reliable protection you have, and banks are now formally telling customers that it should be an automatic habit every single time, regardless of what the environment around you looks like. There's also something important to understand about what happens inside the branch when a teller is helping you with a transaction. When you are at the window and you are required to enter your PIN, the bank employee assisting you is required by bank policy, not by courtesy, not by choice, by policy, to turn away while you enter it. That is a standing professional obligation. If they don't do it, you are completely within your rights to say, directly and without apology, please turn away while I enter my PIN. No legitimate bank employee will object to that request. Any employee who does object, or who seems bothered by it, is something you should report to a branch manager, because that behavior is not consistent with standard banking protocol, and it is worth noting. The third formal rule being issued to seniors relates to your phone, and this is one that catches people completely off guard because it feels like a normal part of getting help at the bank. You're having trouble with the mobile app. A bank employee offers to assist. They ask if they can take a look at your phone. You hand it over because it seems completely reasonable. The person is wearing a uniform. You're inside the branch. Everything feels official and safe. Here is what banks are now formally warning about. Your phone, with an open banking app on the screen, is direct access to your accounts. Not partial access, not limited access. Full access, in real time, in the hands of whoever is holding it. In documented cases that banks have investigated, someone holding a customer's phone for as little as 30 seconds has transferred funds out of the account, added their own device as a trusted contact that later gave them ongoing remote access, or installed software that continued to operate on the phone long after the customer walked out of the branch. The customer had no idea anything happened. Everything looked exactly the same when they got their phone back. The formal guidance from banks on this is clear. Bank employees help customers by explaining what to do. The customer enters the information themselves. If you're in a branch and someone is explaining how to do something on your banking app, they can tell you exactly what to tap, what to enter, where to look. You do it, your hands stay on your phone. If anyone insists that they need to physically hold your phone to complete the assistance, that is the moment to ask for a branch manager. It is not rude, it is not paranoid, it is a completely reasonable request, and any legitimate bank will honor it without hesitation. The fourth rule is the newest, and banks and federal agencies have flagged it specifically because of how rapidly it has escalated in 2026. Never under any circumstances withdraw cash from your bank and deposit it into a cryptocurrency, ATM, or kiosk because someone instructed you to do so. This sounds like something so extreme that it barely needs to be said. But the FBI and the Associated Press both report that this is now one of the fastest growing categories of financial fraud, targeting seniors in the entire country. And the people who fall for it are not people who are easily deceived in other areas of their lives. They are often sharp, educated, careful individuals with decades of professional experience behind them. The scheme works not because people are foolish, but because it is specifically designed to overwhelm the part of your thinking that would normally catch it. Here is how it operates. You receive a call, a text, or sometimes a message, through a platform you use regularly. The person on the other end identifies themselves as an IRS agent, a Social Security Administration official, a Medicare representative, or a law enforcement officer. They tell you something has gone wrong. Your account has been compromised. Someone has stolen your identity. You owe back taxes that were miscalculated. Your benefits are at risk. And they sound completely convincing because they often know your name, sometimes know the last 4 digits of your social security number, and can speak in the exact bureaucratic language those agencies actually use. Then they tell you that to protect your money, to secure your funds, to prevent your account from being frozen, you need to go to your bank immediately, withdraw a specific amount of cash, and deposit it into a Bitcoin ATM or cryptocurrency kiosk. They will tell you this is a secure government process. They will tell you it is temporary. They will tell you the funds will be returned to a protected account in your name. They will stay on the phone with you the entire time to make sure you follow each step correctly. And the moment you feed that cash into the machine, it is gone, permanently. It cannot be reversed by the bank. It cannot be traced by law enforcement in any recoverable way. It cannot be returned. There is no process that gets it back. Indiana became the first state in the country to ban cryptocurrency ATMs entirely, passing that law in March of 2026, specifically in response to this scheme. Tennessee and Minnesota followed. As of May of 2026, 30 states have passed laws restricting or heavily regulating cryptocurrency kiosk operations, and federal legislation is under discussion. Banks themselves are responding by training employees to recognize the behavioral signs of a customer who may be in the middle of one of these calls. Unusual large cash withdrawals, nervousness, a customer who seems distracted or is speaking quietly into a phone, a customer who gives an explanation for the withdrawal that doesn't quite add up. If a bank employee stops you during a large cash withdrawal and asks you why you are making it, answer them honestly. They are not being intrusive. They are not violating your privacy. They have been trained and in many cases formally instructed to ask that question, precisely because in documented case after documented case, the bank employee who asked was the last line of defense between a customer and a total permanent loss. The real IRS does not call you and tell you to move money into cryptocurrency. The real Social Security Administration does not call you and instruct you to protect your benefits through a Bitcoin ATM. Real law enforcement does not ask you to convert your savings to crypto to keep it safe. This does not happen under any legitimate government process, ever, under any circumstances, without exception. The fifth rule is one that happens in the most ordinary seeming part of a bank visit. You're sitting at a desk with a friendly employee. Things are moving along. They slide some paperwork across toward you, they hand you a pen, and the pace of the interaction makes you feel like this is just a formality, just something you sign quickly so you can get on with your day. Banks are formally instructing their customers, you are never required to sign anything you have not read, not as a matter of preference, as a matter of right. The small print in banking documents is where the significant things live. Automatic credit line increases that affect your financial profile. Consent to share your personal and financial data with third-party companies, enrollment in fee-based services you did not request and may not even know are available. All of these have appeared in documents that customers signed quickly, without reading, because the environment made reading feel like the wrong thing to do. Banks know this, and the guidance they are now issuing formally to customers is, slow down. If you are handed paperwork in a branch and you feel any pressure to sign before you've read it, say clearly and directly, I need a moment to read this. Take as long as you need. No legitimate bank can require you to sign without reading. That is not how legally binding agreements work. If anyone in a branch pushes back on your request to read what you are signing, ask for a supervisor immediately. That response, the pushing back, is itself something worth reporting. If you have already signed something and a fee or service is now appearing on your statement that you do not recognize and did not request, call the bank and ask specifically whether there is a signed authorization associated with that charge. If you signed something under pressure or in a moment of confusion and did not fully understand what you were agreeing to, you have the right to file a formal complaint with the Consumer Financial Protection Bureau at consumerfinance.gov. That complaint creates a record and puts the bank on notice in a way that a phone call to customer service alone does not. There is one final development worth knowing about that many banks are now offering and that most customers haven't heard of. It is called a trusted contact designation. Banks in many states are now required or strongly encouraged to offer this system, and it works like this. You designate a family member or trusted person, someone you choose, someone you trust, whose name and contact information is on file with your bank. That person cannot access your account. They cannot move your money. They cannot make any changes. They are simply someone the bank can reach out to if they notice account activity that raises a concern, unusual withdrawals, transactions that don't match your normal patterns. behavior at the branch that suggests someone may be pressuring or manipulating you, the bank can call your trusted contact and say, "We've noticed something and wanted someone who knows this customer to be aware." That's it. That single step has stopped fraud in documented cases before a dollar was lost. If your bank offers this and you haven't set it up, it takes a few minutes, it costs nothing, and it adds a layer of protection that exists entirely outside the schemes that target you directly. Here is what I want you to leave with today. Cash trap devices inside ATMs are an active and documented threat in 2026. If your cash doesn't dispense after a successful transaction, you call the bank from that location before you walk away. Your card never leaves your hands at an ATM for any reason. You cover the keypad every single time you enter your PIN in every environment without exception. Your phone stays in your hands inside the bank, regardless of how helpful the offer to hold it sounds. You never move cash to a cryptocurrency ATM because of instructions from anyone, no matter how official they sound, no matter what they claim to represent, no matter how urgent they make it feel. You read everything before you sign anything, and slowing down to do so is not just acceptable, it is your right. And you consider setting up a trusted contact designation with your bank if you haven't already. None of this is complicated, but the difference between knowing it and not knowing it is enormous. Please subscribe to this channel so you don't miss what comes next, because what comes next is already being documented. Share this with someone you know who receives Social Security, who visits a bank branch, who uses an ATM, who has an account in their name. You may not be able to get the money back after it's gone, but you absolutely can prevent it from being taken in the first place. I'll see you in the next one.